What's up, folks? John back with another Easy Options weekly trade recap. This week I made another $1,000, so excellent week. Let's get into it. Hey folks, now before we get started, I wanted to clarify one thing, and that is that I am 100% a real trader with a real account. Now there's many people on YouTube claiming to be real traders, and in fact, they're paper traders. So if you appreciate the transparency, I would really appreciate a like, subscribe, and hit that notification bell. Okay, let's get started. Alright folks, another killer week on the books. This week I made just over $1,000 and had to roll only one of my positions forward, which I think is excellent considering there was a pretty decent sell-off this week. So, let's get into the trades. So, I've got my table here that goes over the trades I took, and then another table for the rolls I have done. And this week it was just one roll, and that was MU. So let's start off with AMD. AMD, I made $350. I sold the 50 strike for 51 cents and bought it back for 1 cent in 7 contracts. So let's check that out. Okay, so I've got AMD up here. Again, I had the 50 strike, so the price needed to stay above 50. And you can see it boosted up here, and then there was a hard sell-off, and I decided to leave it on and take the risk. I felt there was a very good chance that it wouldn't go below 50, and it started to scare me a little bit, but luckily it really stayed around this range the last day, today Friday, and it really never went back towards my 50 strikes. So I was able to get out of that for a penny, so got basically maximum profit. And if you're interested, let's throw an AMD here. Here are the sell and buy on my order tab. Okay, so next up is going to be MU. MU I made $306. It was the 51.5 strike. I sold those for 52 cents. And actually I did not buy this back for 1 cent. But the premium I collected, which was 52 cents times 6 times 100, right? Which is just about 306. I get to keep that cash. So MU is a special one. Let's go to the chart here. So here's my order tab. Let me go over to the chart. Okay, let's zoom in here a little bit. Here we go. All right, so MU, I had the 51.5 strike. So as you can see, the stock did go through my strike price. So that means if I would have closed out and let that expire, closed out this contract and let it expire this Friday, I would have had to realize a loss. So instead what I did is I rolled that position forward, okay? And what I did there, let's go back to the sheet, is I was able to roll that position down to the 50.5 strike, so $1 down. I almost got it to the 50 strike for the same credit, but I was just a little too late. So I rolled it down and collected 17 cents per contract. So 6 contracts, that equates to $102. So I received $102 to roll the position forward, not realize a loss, and collected more money. And I'm just going to keep rolling until I can get out of this trade. So this is something you have to learn to live with and deal with options. But you get used to it. Okay, so that's MU. All right, next up is Chewy. So Chewy had earnings this week. It was a really good trade. I took it off early, but I was suspicious. I thought I would be able to basically let it ride, and it looks like I could have. And it's the same with SFIX here. It was another earnings play, and I thought about letting it ride. And if I would have gotten full profit on both of these. So that would have been another like $400 or $500. So. But at the same time, I took risk off the table. So let's go over these trades. So Chewy, I made 360. So let's type that in here. Cool. Let me zoom in. So look at this here, guys and girls. My strike was all the way down here at 40.5. Okay. Chewy was all the way up here. I had all this room down to 40.5, and I knew that, and I just decided, hey, you never know in this world. And that's the truth, who knows? There could have been a crash. And I decided to take it off, and I believe, it was over 60% profit. And that happened in like a day. That happened like right after earnings. So I just decided to take it off. And you know what? I was able to get how much? 360. I mean, oh, woe is me. So I could have got a little more, but hey, if you play it safe and take profits when they're reasonable to take, they're gonna add up on you. So that's Chewy. The next one is SFIX. I don't think I drew the line out for that one. Looks like I didn't. Never mind, I did. Awesome. So, as you can see, my strike here was at 20. So again, this was the earnings play. I knew I had a lot of room, but I just decided to take it off. Again, and I took this one off for 13 cents, so I sold it for 34, bought it back for 13. 20 contracts though, but it is a lower price stock. I got the 20 strike. So I got 420 for that, but I could have got a lot more. I could have got another, I think, 200 or 300. So yeah, total that up, it was 1,016. And if you add in the MU, I won't really include that in this week because that would really be like a next week trade. So I'll include that in my total for next week. Another thing I want to clarify is that I did not put on any new trades this coming week. And the reason for that is, let me pull up the SPY here. I'm just not feeling great about what we're looking at here with the SPY. So here's the daily, right? It just looks like we're going to have a pullback. Who knows how long? I have no idea. And I could be wrong, but that's just the feeling I'm getting. It's looking pretty toppy. It's gotten near testing this high here. Now let's look at the weekly chart as well, which I love to look at. I mean, look at this on the weekly. There we go. Let me stretch this out for you. Cool. So, here was the most recent all-time high, 339.08. You can see we've come up a long way here, and got near this high. And, this is a solid weekly red candle, okay? Now, this next week, it could be a kind of a consolidation or even partially green week. I mean, I think what will likely happen is either it will open up around here and it'll push up, and then over the week it's going to sell off and create a long wick, red or green candle. So basically a really long, not a doji, but I forget what they're called. But anyways, this is a long tail at the top. So I think that could either happen, or Monday we could see a gap down, and who knows, I don't know what the candle will be like then, but you would think it would likely be red. Might pop up and sell off the rest of the week. So, for me, I'm trying to be a little bit more careful with when I want to get in on positions, especially when I think we're really extended, which I do think we are right now. So when you're selling puts, it's not your friend if the stock goes down. You do have a little room, like I've talked about before. You have this buffer window. But again, I'd rather avoid having to roll. When you're in these good stocks, you can consistently roll out of them, but why not avoid it? So anyhow, I'm going to assess next week and potentially place trades on Monday, Tuesday, Wednesday, and that depends. And if it does what I said, or if it does what I think, I'll be able to get in at a much safer price. It just depends what the market does. So we'll just have to wait and see. All right, folks, I hope you enjoyed this recap. If you're interested in seeing last week's recap, I'll post that right here. And hey guys, if you're enjoying this transparency and enjoying this channel in general, do me a favor and subscribe. Maybe hit that like button. I'd really appreciate it. All right, folks, I'll be talking to you soon.